Hey everyone! Over the last 5 years, industrial real estate has achieved some significant milestones. In the second quarter of 2022, the industrial vacancy rate reached a record low 3.6%. That was followed by a wave of construction that delivered a record volume of new space. In the 3 years from 2022 through 2024, over 1.4 billion square feet of industrial space was added to the market. And that wave of construction took vacancy rates from their record low back up to 7.8% as of the third quarter of 2025. And even though construction is tapering, with completions expected to fall to just 200 million square feet in 2026, the lowest level since 2014, vacancy rates are still expected to trend higher in the coming year, reaching 8.6% by year end. But that's where the real story starts. Beneath the surface, there are a lot of moving parts and nuances to the industrial market. Nearly half of the completions over the last 5 years have been concentrated in just 10 major metros. And nearly half of the space that's been added came in industrial buildings 500,000 square feet and larger. So while there appears to be a glut of vacant space on a macro level, the vast majority of the availability is concentrated in large format industrial properties in select metros. Over the last 5 years, several markets had outsized industrial inventory growth. The total inventory of industrial space in Austin, Texas, for example, grew by nearly 60%. Phoenix increased its inventory by nearly 40%, Charleston by 36%, Las Vegas by 28%, and San Antonio industrial space grew by more than 21%. So naturally, the industrial vacancy rates of these markets are among the highest in the nation. Likewise, the average vacancy rate for large industrial buildings 500,000 square feet and above is elevated, reaching 11.5% as of the third quarter. And it's these large format industrial buildings in construction-heavy metros that have pushed the national vacancy rate higher. If you look at the other end of the spectrum, smaller format industrial properties and markets with limited construction, it tells a different story. Vacancy rates in Cleveland and Minneapolis have been below 4%. And the vacancy rate of industrial properties between 10 and 50,000 square feet is just 5.2%. And although the vacancy rate of industrial property size between 50 and 200,000 square feet has been on the rise, it still stands at just 7% as of the third quarter. So, while big box industrial vacancy rates in metros with significant supply additions face some challenges, small bay and infill industrial properties, particularly in metros that have not added a lot of inventory, continue to outperform. From an investment perspective, industrial property sales activity is down significantly from the peak in 2021, but the deal velocity in 2025 still stood 19% higher than the average transaction activity from 2014 through 2019. And interestingly, perhaps because of the asset vintage and the nature of the tenants, larger format industrial cap rates have been lower on average than smaller industrial properties. In aggregate, industrial cap rates appear to have stabilized over the last couple years in the upper 6% range. Looking forward into 2026, trade policy uncertainty could weigh on industrial space demand, particularly in regions reliant on international trade with Asia. That said, investor interest in industrial properties remains strong, which will likely continue to support transaction velocity and asset valuations. But should trade policy stabilize, it could bolster industrial space demand sufficiently to curtail the upward drift in vacancy rates. And should that occur, it could put upward pressure on industrial property values. But there's little clarity on when trade policy will stabilize, so the markets will continue to grapple with uncertainty, which is why investors always need to keep their eyes on the horizon.